which is lagging, and that's pharmaceutical. A big overhang on the sector has been the government decision to ban 344 fixed dose combination, or FDC drugs as we call it. This impacts 3,000 to 3,500 crore, or 3 to 4% of the Indian pharmaceutical market. Kewal Handa, the industry expert and the former MD of Pfizer, and Praful Bohra, the Vice President Research at Religare Securities, joins in. Good morning, gentlemen, and thanks so much, for joining in. Mr. Handa, first, can you explain from a company point of view? I'm sure most of the companies are sitting on pretty large inventories. How can they resolve this particular issue? What kind of an impact is it having on the sector?
So as far as the notification is concerned, there are no options. You have to stop selling, both at the manufacturer's level as well as at the retail level. So the retailers, the stockists, have a right to send a goods back, and it will be the liability of the manufacturers to take back the inventories, the liability of the manufacturer to write off the inventory and write off all the raw material and packing material. So if you take a ratio, the losses could go up to about 10,000 crores for the industry.
Okay. Mr. Handa, good morning. Yesterday we spoke to your former colleague, DG Shah, and his argument was that one is not opposed to the ban, but one is opposed to the process. Probably manufacturing should have been stopped, and thereafter, perhaps, the ban enforced. Would that be your stand, that you have no complaint with the principle of these fixed dose combinations being withdrawn, but only the manner should have been different?
Okay, before the break, you talked about two things, the process and the intent. Let me comment on both. The process, the due process has not been followed. The expert committee has given a view. It should have gone to DTAB. After it has been gone to the DTAB, opportunity should have been given to the companies to debate, discuss and agree upon. That would have been the right process to follow, where the data would have been given by the companies, the data would have been given by the DTAB, and a view would have been taken whether this is good or not good, rational or irrational. The other thing is, then a phasing manner should have been given, how to phase out the product over a period of 3 months, 6 months, how to do it. That would have resolved the issue of the inventories, which are both in the plant as well as outside. So the process has not been followed, and suddenly you put the guillotine and the industry has to bear the loss. Now I come to intent part of it. I'm a little worried more on the intent part of it. Now, if they are wanting to look at the entire, FDC combinations and say this FDC combination is not good, then we are talking about 50% of the industry comes under the cloud. And if that's the intent of the government, that to go through a single ingredient route and also then force doctors to do a generic prescription, I think that is not a good prescription for the industry as well as for the consumer.
Okay. Praful, just coming into the discussion, Mr. Handa was earlier telling us that the losses for the industry could be to the tune of 10,000 crore rupees. Take us through the companies that will be most impacted, and if you could, help us with the figures for the impact on each company. And from a stock market point of view, do you think the bad news is already priced into the stocks?
So, if you see, AIOCD did a study, and apparently what has happened is, they feel that the most impacted companies would be, obviously with the largest brands. So, like for example, Pfizer, Abbott, maybe Alchem to some extent. So I think if you see company-wise, I think Corex was the largest brand, amongst the largest brands for Pfizer, I think contributing around 12% of the revenue. So banning that, stopping the manufacturing there, could impact the revenues to that extent. Abbott's, one of the largest brands was Fencidel, that used to contribute goes to around 15%. I think, so the extent of impact would be, to that extent. The other thing is, what is not factored in is the inventory loss, which is there in the channels. So usually we would have like 3-4 months of inventory in the channels, I think. So there may be write-offs, additional to what the sales impact would be.
And what could be the number on account of the inventory loss? And will we see this write-off in the coming quarter, Q4?
So it's pretty difficult to gauge, exactly the impact on the inventory. It would all depend on, specific companies. It would vary according to the companies. The thing is, this ruling is being litigated by a lot of companies. A few companies like Pfizer, Abbott, McLeod, they've been able to get a stay on this. So we will actually, have to go through the litigation process, and only a firm view can be taken once the litigation is, is out. The ruling is out.
Well, just to come back to the moral argument, Mr. Handa, the fact that these combination drugs are an India-specific issue, or perhaps a few more developing countries, is that not an argument enough to say that we should be moving towards the global standards in these issues?
I totally agree with you that irrational combination should not be there in these countries. And we had these habits of having these types of combination mainly because to get new drug approvals, and these approvals were given by the state government and so on and so forth. And therefore, that's how the industry growth has happened. Therefore, there is, of course, we have to take a breather and see what combination should work and what should not work. But saying that argument that these combinations are not there in developed countries, are there only in developing countries, and therefore they should be banned, is not a good argument. Some of these combinations are also available in generic form in developed countries also. In developed countries, there are two markets. One is the proprietary market, and there are generic market. In the generic market, these combinations, some of them are available in developed countries also. So I think we have to take a fair view from the point of view whether these are rational or irrational combination. Whether these combinations have been banned globally, or the molecules within it are banned globally. If so, it's harmful to the patient, and then take a view that these combinations are irrational.
Okay. Mr. Handa, do you believe that this is just the start? 344 drugs have been banned as of now, but there was a committee which was set up in 2014 when they were looking at close to about 6,000 drugs. Can we expect more drugs getting banned, which spells just more and more bad news for the industry?
I think the process has just started, and they are looking at around about 6,000 drugs. The last news I heard about, they are very closely looking at about 3,000 drugs. So that's what I said. When you're looking at such a dramatic structural changes in the industry, the industry has to be also discussed. The industry stakeholders have to be discussed. The consumer interests have to be taken into account. I think that process has to be followed, and a very transparent process where a give and take process should be done. And it's just not, otherwise you will wipe off 50% of the turnover of the industry.
Okay. My God, this 3,000, 6,000 numbers are a little scary. As well, when you ban something without the due process, industry would also be a little worried about future investments. But in any case, there have been other reasons why drug stocks have been falling because of global drug authorities as well. Praful, is the sector itself not a buy for you? If it is, then what are the stocks that you would pick at all, and which would you avoid?
So obviously, if you see the last 3-4 months, the risk on the regulatory side has definitely increased in the domestic market. So initially the NLEM list was increased, the extended. Then we had news flow about the traders' margin being capped in the generic space, the unbranded space basically. And now this FDC ban, we would probably have a price cut in the because of the WPI being negative in the NLEM drugs next year. So I think all these news, together, definitely doesn't translate into a good, positioning for the sector. But I think, from an overall perspective, given that now domestic is a, relatively smaller portion for large number of companies, I think, the rest of the markets are expected to pick up. Our view does not change, because of the regulatory issues. So while I would like to highlight that there are definitely regulatory issues and which can probably impact the domestic growth of the companies in FY17, I think the other parts of the business should continue to deliver. So, from a stock perspective, we like divis at these levels. I think that's one business model where I see, a consistent 20% CAGR growth in earnings for the next 2-3 years, and probably that should pick up after FY19, once the new capacity comes on stream. So divis is one of the topics as of now. We also like Aurobindo. We've consistently maintained that they've been getting approvals, and I think that should translate into higher US growth. So I think these two stocks is something that I would like to recommend at this point.
All right, gentlemen, thanks so much for taking the time out and joining in. So the key takeaways, 344 drugs, the industry impact could be 10,000 crore rupees as of now, but more drugs, maybe even 3,000 drugs could be banned. And from a stock market point of view, the inventory losses that the companies will have to face perhaps is not factored into the stocks. And I think I'm not sure if it's reflecting the stock prices right now, but Lupin, by the way, is at the low point of the day. It's down close to about 1.5%. Pfizer had opened up in the green on the back of the interim relief, but Pfizer now has dipped into the red.
Just one word I wanted to add. NLEM drugs is, I guess, a bit of a puzzle. It's the national list of essential medicines, and Praful's worry was that those prices could drop further because of the fall in the wholesale price index. Well, so that